Hello and welcome to the Today's Money Masters. I'm your host, Jean-Paul Menou. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes, and they will share their strategies over a 1-year period. At the end of the period, the top portfolio manager will be declared. Let's continue with the masters on this exciting journey. Welcome back. On today's program, we are joined by Timar Jackson, one of our professionals. He's from NCB Capital Markets. Good day, Timar. Nice to have you back.
Good day, Jean-Paul. Thanks for having me.
Good. Timar, your portfolio is heavily weighted in PanJam. What do you see as the company's driver to provide excellent returns in the next 6 months?
Well, JP, I must tell you, I've recently disposed of all my shares in PanJam.
Okay.
And this was done for 2 reasons. So first of all, despite PanJam showing very strong fundamentals, the market has been very slow to respond to the good news. For example, for the 9 months ending September 2019, the company reported a massive 72% increase in profit. However, the market only responded by giving it a 3% increase in price.
Okay.
Right? Currently, PanJam trades at a PE of around 13 times, while its main market peers trade at approximately 22 times. What that means is that the investing public is more willing to apply a premium on other main market companies per dollar of earnings. And while I might not agree with this valuation, the market has spoken, so okay. I have to respond. The second thing is that the company recently announced that it is intending to do 2 things, well, 3 things actually. It wants to increase its share capital, it wants to do a stock split, and finally it wants to raise additional capital. Okay. Right? So it will be going to its board to seek that approval. With this news, especially I'm zeroing in on the APO, that's the additional public offering of shares, similar to what JMB did late last year. The company pretty much wants to offer some additional shares to the public to raise capital. And I think this is in line with what they've been doing over the last few quarters. We see where they sold their shares in Sagicor, some of their shares in Sagicor.
Right.
And the purpose of that transaction was really to generate additional capital, which they hope to redeploy into new projects. I think they have something up their sleeve. They're planning something massive, and so they want this additional capital. The drawback of an APO for me is that normally when companies do these additional share offerings, they normally try to come in below the market price. And we saw that with JMB. The company was trading in the high 50 region. Then the company, they announced their APO at a much lower price. And as such, the market price came down to the APO price. If it is that the APO, PanJam's APO is approved, then I expect a similar thing, right? So for that reason, I think it was appropriate at this time for me to take a step back from PanJam. Okay. Potentially, I could revisit it in the future. There's nothing fundamentally wrong with PanJam. It's a great company. Okay. It has been performing well.
I was going to ask, yes.
Right, and I currently have a target price on it of about 121. But here's a challenge with PanJam, I think. Companies, well, not companies necessarily, but investors seem to have some sort of psychological barrier in terms of buying shares beyond a certain price. You know, a lot of investors look at shares at face value and they say, hey, this one is too expensive, right? So when they look at NCB trading above 200, for example, when they see PanJam trading above 100, it's like immediately there's a psychological barrier, because what they're thinking is that if there's a dollar increase on $10, that's 10%. But if there's $1 increase on $100, that's 1%.
Right.
So a lot of investors are looking at value in this way. So they have this psychological barrier. So I think that is one of the reasons why we're not necessarily seeing the responsiveness of the market price to the good news that is coming out on the company's fundamentals. And I perceive very highly that this is perhaps the reason why PanJam is also seeking to do a stock split, because by doing that, they would remove the psychological barrier.
Okay.
You know, the share would be, even though nothing fundamental will change with the company, you know, the stock, the price per share would come down.
Come down and be more attractive.
And be more attractive to the public. So
Okay.
Let's see how that works. I'm definitely excited for the company. If it is that these events unfold during the time that this competition is happening, then I might end up going back into PanJam. But for now, I think I'll ease back and I'll look for other opportunities.
Okay, so you're being cautious with it based on what you've said. You're not. Okay, all right. So we'll keep an eye on PanJam then.
Sure,
that was a
definitely.
big one for you.
Yes.
Timar, there's some rumblings that the government will soon call an election. I think they have to sometime within the next few months.
Yes.
How do you think the expectation of elections will have an impact on the stock exchange, if any?
Well, I mean, one of the things about the election is that the Prime Minister did indicate on numerous campaign presentations that, you know, we must watch the color of the shoes. And so we're watching closely the color of the shoes to see what comes out so we can know when the election will be called. But yeah, that aside, generally, I think it's well established internationally that markets tend to react to events like elections. Right? I think this was very much pronounced in the latest U.S. elections. Locally, though, I'm not sensing that much of the sentiments around election is feeding into the markets. And I think a big part of that is because generally there has been a great level of continuity across administration. Continuity in the sense that the government, successive governments have been focused on fiscal consolidation and improving the sustainability of their budget and their debt, right? So if it is that, you know, there's a changing administration, and I don't want to predict the election, I'm not a pollster. If it is that there's a changing election in administration, I don't expect anything significantly different in terms of the modus operandi fiscally and also economically. I mean, under a new administration, I expect the BOJ to continue to be independent, to pursue monetary policy independently of the government. I expect continuity in terms of fiscal policy. So, I mean, you have to ask yourself, as a market, what can we expect if it is that there's a change? And much of the same. So I think that's probably one of the reasons why we're not seeing much of a reaction to elections at the moment.
Well, nothing has been announced.
Well, nothing has been announced, but we know it's very close. So
because Richard Longmore, our novice, had said a few weeks ago that he thought the government had been doing a good job.
Yes.
In terms of, now that, to me, that kind of is if he's sort of saying the other government wasn't doing a good job, and so with the so we don't reach the election yet.
Yes.
Government hasn't changed. With the expectation that it could change, there's a possibility. Well, you're saying that there's not necessarily a possibility of that affecting the market.
I'm not saying that there's not a possibility. I'm just saying that I don't see. If there's a change any at all, I don't see that impacting the market much. Okay. Given the level of continuity we've seen over successive administration, it could be as well that, you know, the market is pricing in that there will not be a change. So Who knows? You know, I don't have the data, so I can't make that call.
Okay.
But from, you know, just thinking about it analytically, if there's a change, I would expect fiscal policy to remain pretty much just about the same.
Sure.
And monetary policy will be fairly constant given the independence of the BOJ, relative independence of the BOJ.
Sure, okay.
So the impact, these are the variables that really impact the market. And as such, if those are the inputs, we don't expect them to change much. I don't see why the market should be too bothered about what's going on in the political sphere.
Okay.
Especially as it relates to elections.
Right.
Yeah.
Right. Well, we'll just have to wait and see.
Yes.
And we will remain positive about it. Okay. What are the signs, Timar, that you look for to determine if a market is a bull to a bear market?
Okay. So let me explain first of all as a bull market versus a bear market. A bull market is a condition in the financial markets where there's expected to be an increase in prices generally. It could be the bond market, the stock market, or the currency market, any financial market or commodity market, right? A bear market now is the polar opposite of this, right? It's when there's expected to be a general decrease in prices of the assets.
Pullback.
Right?
Okay.
So generally what you find to be the case with bull market is that there's a high level of optimism and there are conditions fundamentally within the market that support that optimism. So in the case of Jamaica, for example, what you'll find is that over the last 5 years or so, and even before that, we've performed very well. The stock market has performed very well. We've received the attention of the international community as a result, right? Paralleling this is the fact that the economy has been growing consistently, right? Recently, the PIOJ announced that we've had our 20th consecutive quarter of growth. Right? While growth hasn't been, significant above 3 and in those regions, growth, it has been small but consistent. Sure. Right? There has been a general increase in optimism. There has been a general increase in consumer and business confidence. And obviously there's an increase in investor confidence because that is what drives the market. Right? So in Jamaica's case, we've seen a very long, nice bull run. But think about this. August last year, the combined market reached its peak, right? But since then, the market has been falling off, right? I have here that since August of last year, the market has fallen 9.76% to date, right? So are we in a bear market? And weighing the conditions and looking at everything that is happening, I'll have to say not necessarily. I mean, you see where the market has fallen off. However, what we have to ask ourselves, what has been driving this fall off in prices? Is it a correction? Is it the case that there's a lot of activity happening in the market that's causing persons to sell stocks that they already own? And I think for me, the latter is what really obtains. There has been a number of large transactions that have occurred since last August. And when you think about them, a lot of them are massive transactions. Some of them are record breaking. Think about JMMB APO, for example.
Right.
Raised above $11 billion, right? Massively oversubscribed. Think about Trans-Jamaican Highway. Okay. This is supposed to be the largest IPO we've seen in Jamaica, right? So a lot of persons have been, selling stocks in order to get the liquidity to go into these offers. And as a result, we've seen that general fall off in the market. Okay. In terms of expectations going forward, given the very long pipeline of transactions we expect to see during 2020, we could expect to see the market sort of remain at a fairly low level.
Okay.
Well, call it relatively low level, to where it was, for example, in August of last year. And that's because persons need that liquidity, they need money.
Yeah.
So in order to get that money, they're gonna either have to borrow it or they're gonna have to trade in some of their stocks in order to get that money. Okay. Right? So we can expect to see some of these activities affecting, the market in this way going forward.
Okay. But with the IPO, with these big IPOs coming on stream, and we're expecting a couple more, I think, in the coming months.
Yes.
Doesn't that augur well for the market to go bullish?
Bullish. So I think when you look at the market being bullish, it's fair to say that yes, people will be excited about the stock market. More people will be coming in. Uh-huh. However, when you think about the second condition for which we consider a market to be bullish, prices are increasing. Our expectation that prices will increase, I don't necessarily think that might obtain, and simply because, as we said, there are a number of transactions that are coming.
Right.
Persons might want to get into these transactions, but don't have the funds available, so
okay.
they'll seek to sell off existing stocks, and that might
okay.
just cause the prices of these stocks to be a bit muted going forward.
Sure.
All
right.
Yeah.
Interesting stuff. As usual, yes. Timar, nice to see you. Thank you so much for joining us this week. We're going to have to leave it there. All the best in the competition.
Thank you very much, JP.
I will speak again soon. That was Timar Jackson giving us his financial thoughts. He's from NCB Capital Markets. Join us next week, same time, for another exciting episode of the Masters Competition, as we'll meet another participant. Follow the pros and the one novice each week on the Masters Competition. Listen and analyze the strategies with the Masters on Radio Jamaica, Thursdays at 8:45 a.m. as they challenge each other to stay ahead. Also look out for their portfolios in the Financial Gleaner on Fridays. The Masters Competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Money Masters Limited, Credit Union Fund Management Company Limited, and the Jamaica Stock Exchange. I'm Jean-Paul Manu. The Masters is another fine product from Today's Money Limited.